Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the sometimes confusing world of corporate finance. And let me tell you, this AEI Income and Growth Fund report might just give us a few headaches to decode, but hey, that's why we're here. Right, get ready for a deep dive into how this partnership is handling its real estate game. So what's the big picture here? For the period ending June 30th, 2025, AEI Income and Growth Fund XXI Limited Partnership is putting out its quarterly report. This is basically a health check for the company, and we've got a lot of juicy financial data to peel back like an onion. Let's start by looking at what the partnership actually owns and owes. We can see their assets and liabilities, which is like looking at a company's financial snapshot. On the asset side, they have cash and real estate investments. The most significant chunk is their real estate held for investment. This is where the serious money is, and importantly, we see changes from the end of last year to the middle of this year. Their real estate investments at cost have gone down from over $14 million to about $126 million. This is mainly because they've been selling off some properties, and of course when you sell property you account for how much it's depreciated or lost value over time. Their accumulated depreciation has also decreased, supporting the idea of property sales. The net amount of real estate held for investment has dropped from close to $98 million to just over $9 million. But here's something interesting. While they're selling properties, their cash balance has jumped significantly from around $240,000 at the end of last year to almost $800,000. Now, this suggests they've either received a lot of cash from these sales or perhaps are holding onto it for future investments or distributions. Now, let's talk about how much money is actually coming in and going out for the 6 months ended June 30th, 2025, compared to the same period last year. Rental income, which is the bread and butter of a real estate fund, has decreased from about $499,000 in 2024 to approximately $470,025. This is a trend we need to watch, but it's also explained by the sale of a property, as mentioned earlier. On the expense side, partnership administration costs are down from almost $85,000 to about $57,000. This could mean better efficiency or fewer management activities. Depreciation and amortization expenses have also decreased, which is expected if they are selling off properties with significant accumulated depreciation. Here's where the story gets really interesting. For the 6 months ended June 30, 2025, the partnership recorded a massive gain of over $25,000 from the sale of real estate. This is a huge jump from zero in the previous year. This single event dramatically boosted their net income. Thanks to that property sale, their net income for the first 6 months of 2025 skyrocketed to over $932,000 compared to just under $98,000 in the same period in 2024. That's a nearly tenfold increase driven almost entirely by that property sale. Let's look at the cash flow specifically. This tells us where the actual cash is coming from and going to. Again, we see that massive net income of $932,000 for the 6 months of 2025. The depreciation and amortization of over $228,000 are added back because they're not actual cash outflows. And that huge gain on sale of real estate is subtracted here because the cash from that sale was already accounted for in the investing activities section. Under investing activities, we see they received over $13,345,000 from the sale of real estate. This is the cash that came in from selling a property. Now, this is a crucial point in their financing activities. They spent over $795,000 to repurchase partnership units. This means they bought back ownership from some of their investors. This can be a way to increase the value for remaining investors or a signal that they don't see better investment opportunities. They also paid out over $346,000 in distributions to their partners. This is the money they return to investors from their earnings or cash flow. Despite all these activities, including significant payouts for unit repurchases, their cash balance at the end of the period is $790,000, almost $800,000. This is a healthy increase, showing they manage their cash well even with significant buybacks and distributions. This table shows how the partner stakes in the company have changed. Here we see a clear decrease in the number of limited partnership units outstanding from over 17,000 to about 16,000. This confirms the unit repurchases we saw in the cash flow statement. They bought back nearly 1,100 units. The partner's capital has decreased overall from about $971,000 to $97,300. This is also a direct result of those unit repurchases and the distributions they paid out. These notes are super important because they explain the numbers in more detail. This basically tells us these are interim financial statements. They're unaudited and not as detailed as the full annual report, so we should read them with that in mind. They're good for an overview, but not for every single tiny detail. This section explains who runs the show. AEI Fund Management XXI Inc. or AFM is the managing general partner, and the estate of Robert P. Johnson is the individual general partner. It also mentions AEI Fund Management Inc. or AEI. An affiliate handles the administrative and operating functions, so it's all quite interconnected. This also clarifies some past decisions about continuing or liquidating the partnership, indicating they've decided to continue operations for now. The partnership owes AEI Fund Management Inc. money for administrative and operating services. This is a non-interest bearing debt, so no extra cost for borrowing there. It's like paying your management company for their work, standard stuff. This section highlights the distributions declared by the partnership, which are quite significant, over $541,000 in the first half of 2025, compared to over $346,000 in the same period last year. They also detail that unit repurchase we saw costing $787,000 for about 1095 units. This repurchase is part of their agreement and aims to increase the ownership stake for the remaining limited partners. This is where management talks about performance and what they see coming up. They're telling us to be careful with their predictions about the future because things like market conditions, tenant defaults, and economic factors can change everything. It's a standard disclaimer, but it's good to remember. They explain how they value properties when they buy them, including intangible assets like lease values. This is important for understanding how their asset values are determined. This part discusses how they check if their properties have lost value, if they think they might not be able to recover the cost. This is crucial for spotting potential asset write-downs or impairments. They mention that national economic conditions, higher interest rates, and inflation can impact their tenants' ability to pay rent. This is a key risk for any real estate investment. Management confirms that rental income decreased due to the property sale, but they expect around $922,000 in rental income for the full year 2025. This gives us a good forward look. They also talk about their cash situation and how they fund operations and distributions. The increase in cash by over $550,000 in the first half of 2025 is a key positive sign driven by property sales and operations. This is a specific example of the property sale they made that contributed to their financial results. This sale generated a gain of over $825,000, which really boosted their income for the period. This section is not required typically for a smaller reporting company, so they've skipped it. This is about the company's internal controls, ensuring their financial reporting is accurate and reliable. They state their controls are effective, which is what you'd expect them to say. This section details the repurchase of partnership units. They explain the process of buying back units at a discount and the limitations on how many units they can buy each year. This is the concrete data on the unit repurchase mentioned earlier. It shows a specific number of units bought back at an average price of $718.47 per unit. This action is mandated by their partnership agreement, making it a predictable part of their strategy for managing ownership. So my take on this AEI Income and Growth Fund XXI Limited Partnership report is that it's a company actively managing its portfolio. They've successfully sold off a property, generating a significant gain and boosting their cash reserves. The decrease in rental income is a direct consequence of this sale, which isn't necessarily a bad thing if they're strategically repositioning or if that property was less productive. The repurchase of partnership units is an interesting move. It can signal confidence in the remaining assets or a way to manage investor payouts. However, it does mean fewer units outstanding, which concentrates ownership and potentially future gains or losses among fewer partners. The increase in cash is a strong positive, showing good liquidity even after these major transactions. The main risks they mention are external economic factors and tenant defaults, which are pretty standard for real estate, but still worth watching. If their tenants struggle due to inflation or economic downturns, it directly impacts the partnership's income. Overall, the partnership experienced a highly unusual period due to that substantial property sale, which skewed the 6-month results significantly. Looking forward, the key will be how they utilize that increased cash position and manage the rental income from their remaining properties without the boost from that one sale. What do you all think about these moves? Did they make the right call selling that property and buying back units? Let me know your thoughts in the comments below if you found this breakdown helpful. Give us a thumbs up and subscribe for more corporate decoding. If you want to dive even deeper or just hang out and discuss these filings, be sure to join our Discord community. The link is in the description below. Thanks for watching, and until next time, keep decoding,